Thanks for clicking. The Russian invasion of Ukraine continued to dominate China's news this week as China continued to balance both its support for Russia and blaming the United States for the invasion. With that said, we did get some interesting news on Evergrande.
Welcome, comrade.
As well as some more news on bailouts.
No bailouts.
China buying up projects from distressed developers. We also received some predictions on the Chinese economy for 2022 as it continues to deal with both the Russian invasion and its real estate crisis. So what I want to do today is go over Evergrande, China's real estate bailouts and its handling of the economy, and then move on to China's handling of the Russian invasion of Ukraine. We're going to continue to track China's real estate crisis and also how the Russian invasion of Ukraine will no doubt affect China's economy in the coming weeks and months, and maybe years. If you want to get those updates, make sure you click like and subscribe. But for now, let's get into Evergrande. We received news this week that Evergrande's founder, Hui Kai-yan, I hope I said that right, was asked not to attend the Chinese People's Political Consultative Conference, or CPPCC for short.
Go away, Frank.
The conference is widely held as an important meeting in China, as it constitutes a meeting of 2,000 members, including the nation's most prominent politicians and entrepreneurs. The snub is seen as largely significant, as when Hu Kai-yan attended the Chinese Communist Party's 100th anniversary in July, it was seen as a signal to investors that the government was still backing Evergrande. With Kai-yan told not to attend this meeting, that Evergrande's founder would not be welcome at this meeting of the CPPCC. Even with the acronym, it's still a mouthful. This definitely sends a signal to real estate investors that Evergrande really does not have the support of the government anymore, and this is at a time when investor confidence in China's real estate industry is at an all-time low. We also had some news this week about China buying up even more projects from these distressed real estate developers. We spoke last week about Beijing buying up assets from Evergrande, bailout by any other name. But this trend continued this week, as state-backed firms bought up another $168 million from another property developer, Yuzhu Group Holdings, who recently had their accountants quit on them over concerns over basing accounting principles. As a side note, this is not the first time that accountants have quit on these real estate developers, as we also received news a few weeks ago that Hobson Development and China Aiyuan also had accountants quit over concerns about the book. And I'm sure this is probably going to come more and more to light as China and China's real estate developers are not always upfront with their data.
Don't ask me about my business.
This is just a side note, but still, it's something to keep in mind looking into the future, as it might be a sign of things to come. Logan Group, another real estate developer in China that was once considered strong, which we've talked about before, also had some of its projects bought up by Chinese-backed state firms. So we saw last week it was just with Evergrande, and then we see this week it's more and more firms that are being bought up or having their projects bought up by these state-backed firms, read the government, which, like we said, is a bailout by any other means, any other name. Given the ongoing real estate crisis, and with Fitch saying that they are expecting to see more debt exchanges throughout the year, a debt exchange is when a developer exchanges some of their debt for stock in that developer's company. Given that we're supposed to see many of those throughout the year, and many have predicted that we're going to see even more defaults throughout 2022, China lowered its GDP expectations to 5.5%, which is China's lowest GDP goal in 30 years. Even with them setting their goal at 5.5%, and with the IMF saying no, it's actually going to be closer to 4.8%, the 5.5% is definitely ambitious. After the announcement of the 5.5% target, analysts said that we should expect China to engage in a spending spree, as it's going to be very, very difficult to get to that 5.5%, absent major fiscal and monetary stimulus. So interest rate cuts and spending.
There's not a lot of optimism right now, except if the Chinese government really opens up the taps and does their old tried and true infrastructure spending and also cuts interest rates, perhaps, economists say.
So yeah, as this real estate crisis continues, it looks like China is going to be spending, and spending a lot. And we also received confirmation this week that they might be helped along by Russian oil. So we talked last week about the idea that China isn't intervening in this crisis. China isn't intervening in the Russian invasion of Ukraine, as it's going to look to capitalize on this situation and buy up Russian oil on the cheap. Fast forward to this week, we see that China is seriously looking into purchasing shares of Russian oil giant Gazprom. So just as the United States has banned Russian oil from its shores, a largely symbolic ban as Russian oil only accounts for about 3% of U.S. imports, but a ban nonetheless. So just as the West is looking to cut off the export of Russian oil, really isolate Russia from being able to sell its oil on the world market, China is stepping up to the plate and is more than willing to take on Russian oil, not only buy its oil, but is also trying to buy stakes in its oil companies. China is definitely looking to capitalize on this situation, not only in the short term by buying Russian oil cheap, but actually taking ownership stakes in these Russian oil companies. So while China is obviously not holding Russia to account for this invasion of Ukraine,
it's not their fault.
And instead, they are blaming the US for instigating this crisis. They are simultaneously looking to capitalize on this crisis as a means of securing Russian oil, as a means of securing cheap oil, cheap commodities, not only now, but for far into the future by taking ownership stakes. So while here in the US, we are obviously worried what these oil spikes are going to do to our inflation rate. How high can oil go, and what is that going to do to push up our already decades high inflation rate? China too is worried about their inflation rate, as China needs loose monetary policy. China needs low interest rates, so it needs to keep its inflation low. If China can secure these gas contracts, if they can secure this oil from Russia on the cheap, especially on the cheap, as Russia doesn't have a whole lot of other places left that they'll be able to export their oil to. If China can secure all this oil on the cheap, it will help them keep their inflation rate low, which will help them keep their interest rates low, which they are hoping will help to revive the real estate sector, which, as we've said before, constitutes about 1/3 of Chinese GDP. So this really does come down to China trying to capitalize on this situation, and if they can do it successfully without gaining their own sanctions from the US, and that's obviously a different discussion for another time. But if China can do this successfully and it can secure this oil cheaply, inexpensively, and as a result be able to keep its interest rates low, especially relative to that of the United States, this very well might be able to help China revive its real estate sector with low interest rates, and could definitely go a long way to help revive China's economy. Whether or not they will be successful at this remains to be seen, but we'll definitely have updates for it on this channel. Click like and subscribe if you want to get those updates, and thanks so much for watching.